Hello friends, welcome to my channel and thanks for watching this video. Friends, in this video I'm going to discuss about the chart of Dow Jones Industries, which is available on the screen right now, and the data is available since 1915 till date. So what I was thinking is, can we just go back and check if the data is available? So fortunately, I am able to find the data of DJI Dow Jones Indices since 1915 and look at the chart structure or what was happened after the Spanish flu, which occurred in 1918 and was available across the world till 1920 and maybe afterwards as well. Also, what was happened in the depression of 1929 1930, and just try to correlate the things with the current scenario that as some people or some economists are saying that we are in recession. Obviously, looking at the GDP number, which has gone down like crazy, and some people are also saying that we are in a recession depression kind of scenario for some of the economies, or if we are not, then probably we will definitely get into those kind of situations. So we will try to look at the chart of DJI and try to find out if something we can find meaningful and try to correlate with the current situation. So if you just see the kind of fall which Dow Jones had since January 2020 till March 2020. So it's very minuscule on the chart looking, because the data is so big that these kind of drops are very minuscule on the chart. Even these kind of drops happened in 1946, even in 1941. You will see in 1957. I just calculate percentage because 4,900 to 4,000. So 4,900 to 4,000 may not sounds very big amount of change, but in terms of percentage, it's actually quite meaningful. In terms of drop, so it's around 18%, right? So right now we have more than 26, 27, or 30 odd percent. So this is the current situation, but as I have said that we were trying to look into the past situation. So just see that these are the two things. Okay, we will zoom it further, but just see what was happened in 1920 and even in 1930. Chartically you will see the impact in terms of price action is much beyond anybody's expectation. Why I am saying this is because the high of 1929 was finally crossed. This high finally crossed in the year 1990. So if you just draw a line till here, what you'll find that there is a 60-year of slump in between. Though share price have moved since 1931 till 1965, it has moved significantly. Like the high is around 842, and in 1967 it is like 7,000. So price wise, it has moved like seven times, seven more than 700%. But if we make a line and try to see the trend, so logically the high of 1929 has taken over after 1990. So it's a very big impact, and there are lots of things which were there or which weren't there. So I'm just trying to explain over here. First we will see the chart, we'll get an idea. So you will see this is what has happened after 1915, you know, and the share price has fallen from 2500 till 957. So it's a pretty big, it's a pretty big decline. So it is around 60% of decline. So you can call it as a recessionary kind of phase, obviously. Then this 1918 to 1920, this area, you can see this Spanish flu, occurred in this area. But afterwards you will see, you can find a double bottom kind of pattern. And since 1921 till 1929, so there is a decade long bull run, and that is more than 500%, because if you check the high, which is around 5674, from the lows of 957, so it is around 54, to be precise, 492, which is around 500% or 5 times the index has jumped. So this is the kind of thing. Obviously we will have some recessionary kind of things, but this is what has happened. And afterwards the slump is so big, from the high of 1929 to 1932. So this is a 3 years of slump. And the stock markets across the world, I don't know, I don't have any information that how many stock markets were there at that time. Very few, maybe European and US West countries. So that time things gone haywire, and the depression, has a far-reached impact not only in US but across the world. But there are 2 3 things which is available right now but we weren't available right there, right that at that time. And that was: number one, technology; number two, medical aid or medical advantage; number three, currency. Because that is the most important thing which you need to understand, that currency was not there at that time. What was available was money, because you cannot print currency like we can right now. Previously, each and every printed money has to be equivalent with the amount of gold which the country possess, which further removed in the later years. But right now we don't have that, and we can print as much as we can, and the leader of that is obviously the US. So the thing is, what I'm trying to say here is, even though we don't have those things, stock market have seen a 500% of rally in the next 9 years since 1920. But right now we do have lots of lots of unconventional, uneconomical, which is not, you cannot find those tools on the economic books, but you will find those things on the stock market. And I think which will propel the stock market, much more faster, much more higher in a very short span of time. What will eventually does will squeeze this run, which has happened in 10 years, which will probably happen in 2 or 3 years. And after that we will see a big kind of drop which has happened. And that's when the actual depression came. Because understand one thing, history does not repeat, but it does rhyme, in the year. So you have to be very focused and very careful about that. I do understand this is just my view. I may probably be wrong, but the thing is, if you can see the chart and see that things, try to compare the things, that is what I am able to see, that the current stock market is not yet over, but it will over soon. But before that we will have a very big run on the upside. That's what I'm trying to say. So thanks for watching this video.